Question 1. What is the primary difference between level term life insurance and decreasing term life insurance? A. Level term provides a consistent death benefit while decreasing term reduces the death benefit over time. B. Level term has a lower premium than decreasing term. C. Decreasing term allows for a return of premiums upon expiration, while level term does not. D. Level term is only available for individuals under 50 years old, whereas decreasing term has no age limit. Answer: A level term provides a consistent death benefit while decreasing term reduces the death benefit over time. Explanation: Level term life insurance provides a fixed death benefit and consistent premiums throughout the policy term. This makes it suitable for individuals seeking predictable coverage. On the other hand, decreasing term life insurance features a death benefit that decreases over time, which typically aligns with decreasing financial obligations, such as a mortgage. This structure makes decreasing term generally more affordable than level term, but limits the benefits as the term progresses. Understanding these key distinctions is crucial for determining which policy best meets an individual's needs. Question 2. Scenario: Mr. Thompson has purchased a level term life insurance policy with a term of 20 years. After 15 years, he wants to convert his policy into a whole life insurance policy. What should Mr. Thompson be aware of regarding the convertibility feature? A. He can only convert to a new level term policy at the same premium rates. B. The conversion must occur before the end of the 20-year term, and he will need to provide evidence of insurability. C. There may be a deadline for conversion, but no evidence of insurability is required. D. The converted policy will have a lower death benefit than the original level term policy. Answer: C. There may be a deadline for conversion, but no evidence of insurability is required. Explanation: Most level term life insurance policies offer a convertibility feature that allows policyholders to convert their term coverage to a permanent policy, typically without needing to provide evidence of insurability. However, the conversion must usually be completed within a specified time frame, often outlined in the policy. This provision is beneficial for individuals who may develop health issues over the term. It's essential for Mr. Thompson to review his policy documents for specific deadlines and any potential adjustments in premium rates or death benefits after conversion. Question 3. When underwriting a term life insurance policy, which of the following factors is least likely to influence the premium rate for an individual? A. The individual's smoking status. B. The individual's occupation. C. The individual's credit score. D. The individual's age at the time of application. Answer: C. The individual's credit score. Explanation: Underwriting assesses risk factors to determine premiums. Age, smoking status, and occupation significantly impact risk evaluation. For instance, older applicants or smokers generally face higher premiums due to increased mortality risk. Occupation is also considered, as high-risk jobs may lead to higher premiums. However, an individual's credit score is typically not a relevant factor in underwriting life insurance policies, as life insurance underwriting focuses primarily on health and lifestyle factors rather than financial history. Understanding these underwriting criteria helps students grasp how insurers evaluate risk and set premiums accordingly. Question 4. Which of the following statements accurately describes the incontestability clause in a life insurance policy? A. The insurer can deny a claim for any reason within the first 2 years of the policy. B. After the policy has been in force for a specified period, usually 2 years, the insurer cannot contest the validity of the policy based on misstatements made by the insured. C. The policyholder can contest any claims made by the insurer at any time during the policy term. D. The incontestability clause is applicable only to whole life insurance policies, not term life policies. Answer: B. After the policy has been in force for a specified period, usually 2 years, the insurer cannot contest the validity of the policy based on misstatements made by the insured. Explanation: The incontestability clause protects policyholders by limiting the insurer's ability to dispute a claim based on misstatements made in the application after a certain period, typically 2 years. This clause ensures that once the policy is established and the time frame has passed, the insurer must honor the policy even if there are inaccuracies in the initial application. This provision promotes stability and peace of mind for the insured, knowing that their beneficiaries will be entitled to the death benefit after the incontestability period. Question 5. What is a key characteristic of return of premium term life insurance? A. It guarantees a death benefit equal to the premiums paid if the insured dies during the term. B. It returns all premiums paid if the insured survives the term. usually at a higher premium cost than standard term policies. C. It allows the policyholder to access a portion of the death benefit while still alive. D. It has no expiration date and remains in effect indefinitely. Answer B. It returns all premiums paid if the insured survives the term, usually at a higher premium cost than standard term policies. Explanation: return of premium ROP term life insurance offers a unique feature where, if the insured outlives the policy term, they receive back the total premiums paid. This policy typically comes with higher premiums compared to standard term life insurance because of the additional benefit provided. ROP policies are appealing to individuals who desire a return on their investment should they not require the death benefit, making it an attractive choice for those who may have changing life circumstances. Question 6. Which of the following factors would typically NOT be a reason for an insurance company to deny a death claim during the contestability period? A. The insured provided false information about their health history. B. The insured committed suicide within the first 2 years of the policy. C. The insured was engaged in illegal activities at the time of death. D. The insured failed to pay premiums on time. Answer D. The insured failed to pay premiums on time. Explanation: during the contestability period, usually the first 2 years, insurers can deny claims based on misrepresentation or specific circumstances such as suicide or illegal activities. However, failure to pay premiums results in policy cancellation, and the insurer cannot deny a claim on this basis if premiums were paid in full before death. Understanding the implications of the contestability period and the conditions under which claims can be denied is crucial for both agents and policyholders to ensure proper expectations regarding claims. Question 7. Which rider would provide additional coverage for an individual spouse without requiring a separate policy? A. Waiver of premium rider. B. Spouse term rider. C. Return of premium rider. D. Accidental death benefit rider. Answer B. Spouse term rider. Explanation: a spouse term rider allows policyholders to add coverage for their spouse under their own term life insurance policy, providing a death benefit if the spouse passes away during the term. This rider is typically more cost-effective than purchasing a separate policy. A waiver of premium rider, on the other hand, waives premium payments if the policyholder becomes disabled. Understanding riders and their specific applications helps policyholders tailor their insurance policies to better meet their family's needs. Question 8. Scenario: MS. Carter has a 15-year decreasing term life insurance policy. She is concerned that her family's financial obligations will change significantly in the next few years due to a new business venture. What options should she consider regarding her current policy? A. MS. Carter should switch to a level term policy to maintain a constant death benefit throughout the term. B. MS. Carter can continue with the decreasing term policy since it is specifically designed for decreasing obligations. C. MS. Carter should cancel her policy and not obtain any additional coverage, as the existing policy is sufficient. D. MS. Carter should convert her decreasing term policy to a whole life policy to ensure lifelong coverage. Answer A. MS. Carter should switch to a level term policy to maintain a constant death benefit throughout the term. Explanation: if MS. Carter anticipates increased financial obligations due to her new business, switching to level term life insurance policy would be advisable. This type of policy provides a fixed death benefit, ensuring that her family remains financially secure regardless of decreasing coverage. Continuing with the decreasing term policy may not align with her future needs, while cancelling the policy could leave her unprotected. Converting to whole life may not be necessary unless she requires lifelong coverage, as it comes with higher premiums. Evaluating her options in relation to her evolving financial situation is crucial for her overall insurance strategy. Question 9. In Montana, what is a primary consumer protection feature associated with life insurance policies? A. Policies must have a built-in cash value. B. There is a mandatory free look period during which the policy can be cancelled for a full refund. C. Premiums cannot be adjusted once the policy is issued. D. Policyholders are guaranteed access to premium tax deductions. Answer B. There is a mandatory free look period during which the policy can be cancelled for a full refund. Explanation: Montana law mandates a free look period for life insurance policies, which allows policyholders a specific time frame, usually 10 to 30 days, to review their policy and cancel it for a full refund if they are not satisfied. This consumer protection feature enables individuals to reassess their purchase without the risk of financial loss. Understanding this aspect of Montana insurance regulations is critical for agents and policyholders to ensure they are aware of their rights and options following the purchase of a life insurance policy. Question 10. What is the primary purpose of the Medical Information Bureau (MIB) in the underwriting process? A. To provide financial records of the insured. B. To compile medical histories of applicants to assess risk. C. To verify the identity of the insured. D. To ensure that the insured has a clean legal record. Answer: B. To compile medical histories of applicants to assess risk. Explanation: the Medical Information Bureau (MIB) serves as a resource for insurers to assess the risk associated with potential policyholders by compiling and sharing medical history data. This information helps underwriters make informed decisions about coverage and premiums. It is not used for financial verification or legal background checks. Understanding the MIB's role in the underwriting process is essential for agents and applicants to navigate the complexities of obtaining life insurance coverage. Question 11. Which of the following statements about decreasing term life insurance is true? A. The death benefit remains constant throughout the policy term, regardless of the insured's age. B. The death benefit decreases over time, typically in alignment with a decreasing financial obligation, such as a mortgage. C. It allows for an increase in death benefit if the insured's health improves during the term. D. Decreasing term life insurance is the most expensive type of life insurance due to its flexibility. Answer: B. The death benefit decreases over time, typically in alignment with a decreasing financial obligation, such as a mortgage. Explanation: decreasing term life insurance is designed to provide a death benefit that decreases over the policy term, often correlating with financial obligations that diminish over time, like a mortgage or personal loan. This type of insurance is generally more affordable than level-term policies due to the decreasing risk over the policy's duration. It does not allow for increases in benefits or offer the same flexibility as other types of coverage, such as whole life insurance. Question 12. What is the significance of the grace period in a life insurance policy? A. It allows the insurer to refuse claims if premiums are unpaid after a set time. B. It provides a specific time frame during which the insured can pay overdue premiums without losing coverage. C. It ensures that claims will be paid even if premiums were not paid. D. It allows policyholders to change their death benefit amount without additional fees. Answer: B. It provides a specific time frame during which the insured can pay overdue premiums without losing coverage. Explanation: the grace period is a provision in life insurance policies that gives policyholders a certain amount of time, usually 30 days, to pay overdue premiums after the premium due date. If the premium is paid within this period, coverage remains in effect, ensuring that the policyholder is not immediately penalized for a mispayment. If the premium is not paid, the insurer may then have grounds to terminate the policy. Understanding the grace period is vital for maintaining coverage and ensuring financial protection. Question 13. Scenario: Mr. Thompson recently purchased a level term life insurance policy for $500,000 with a 20-year term. After 10 years, he experiences a significant change in health. What options does he have regarding his current policy? A. He can only renew the policy for a higher premium due to his health changes. B. He can convert his level term policy to a whole life policy without additional underwriting. C. He must surrender his current policy and purchase a new one with more favorable terms. D. He can maintain his current policy and will not face any changes to premiums or coverage. Answer: D. He can maintain his current policy and will not face any changes to premiums or coverage. Explanation: Mr. Thompson can maintain his level term life insurance policy regardless of his health changes. Level term policies guarantee fixed premiums and a consistent death benefit throughout the term, regardless of the insured's health status. While he may consider conversion options, those are typically outlined in the policy's terms and not obligatory. It is crucial for policyholders to understand that their existing policy remains valid and unaffected by changes in health after issuance. Question 14. Which of the following is not a factor that affects life insurance premiums? A. Age and health status of the insured. B. The geographic location of the policyholder. C. The presence of a specific rider on the policy. D. The stock market performance during the policy term. Answer: D. The stock market performance during the policy term. Explanation: Life insurance premiums are influenced primarily by factors such as the insured's age, health status, and any additional riders included in the policy. Geographic location may affect risk assessments related to regional health issues, but stock market performance does not directly impact the premiums of term life insurance policies. Understanding these factors can help consumers make informed decisions when selecting coverage. Question 15. In Montana, which of the following requirements must an insurance agent meet to be licensed to sell life insurance? A. They must have a college degree in finance. B. They must complete a specified number of continuing education credits annually. C. They must have at least 5 years of experience in the insurance industry. D. They must only pass a background check with no formal examination required. Answer. B. They must complete a specified number of continuing education credits annually. Explanation. In Montana, insurance agents must complete ongoing education requirements to maintain their licenses, ensuring they stay current with regulations and industry practices. This is crucial for providing clients with informed and ethical service. While there are no formal college degree requirements or extensive experience mandates for initial licensing, agents must pass an examination to demonstrate their knowledge of life insurance principles and regulations. Question 16. What is the primary purpose of a misstatement of age or gender clause in a life insurance policy? A. To ensure that premiums are refunded if a claim is filed. B. To correct the premiums and death benefit based on accurate age or gender information. C. To deny claims if the insured's age or gender is incorrectly stated. D. To allow the insurer to increase premiums retroactively. Answer. B. To correct the premiums and death benefit based on accurate age or gender information. Explanation. The misstatement of age or gender clause allows the insurer to adjust the policy's premiums and death benefit if the insured's age or gender was misrepresented in the application. If the insured's true age or gender would have affected the underwriting process, the insurer can make necessary adjustments to ensure the policy aligns with the original risk assessment. This clause is essential for maintaining fairness and accuracy in the underwriting process. Question 17. Which rider provides coverage for the insured in case of disability that prevents them from earning an income? A. Return of premium rider. B. Disability income rider. C. Accidental death benefit rider. D. Spouse term rider. Answer. B. Disability income rider. Explanation. A disability income rider provides a monthly income benefit if the insured becomes disabled and is unable to work. This rider can significantly enhance the financial protection offered by a life insurance policy, allowing policyholders to maintain their financial obligations while incapacitated. It is important for policyholders to understand the implications of adding such riders to their base policy, including potential impacts on premiums and coverage limits. Question 18. Under Montana insurance regulations, what must agents disclose to clients before the sale of a life insurance policy? A. The insurer's past financial performance. B. The commission structure of the agent's compensation. C. The names of all clients previously served by the agent. D. The agent's personal investment in the insurance company. Answer. B. The commission structure of the agent's compensation. Explanation. Montana regulations require insurance agents to disclose their commission structure to clients to promote transparency and ethical practices in the sales process. This disclosure helps clients understand potential conflicts of interest and evaluate the advice provided by the agent. Failure to disclose this information could result in disciplinary action against the agent and affect their ability to maintain their license. Question 19. What does the term contestability period refer to in a life insurance policy? A. The time frame during which the insured can cancel the policy for a full refund. B. The duration in which the insurer can investigate the insured's application for misrepresentations. C. The period when policy premiums are discounted for new clients. D. The time limit within which the insured can claim benefits without any documentation. Answer. B. The duration in which the insurer can investigate the insured's application for misrepresentations. Explanation. The contestability period, usually the first 2 years of a life insurance policy, allows insurers to investigate claims and challenge them based on misrepresentations in the application. If a claim is filed during this period, the insurer can review the application details to ensure accurate information was provided. After this period, claims can only be contested on specific grounds, such as fraud. Understanding the contestability period is essential for both policyholders and agents to navigate the claim process effectively. Question 20. What is a primary feature of renewable term life insurance? A. It cannot be converted into a whole life policy. B. It allows the policyholder to renew the policy without undergoing additional medical underwriting. C. The premiums decrease with each renewal. D. It automatically provides additional death benefits for accidental deaths. Answer: B. It allows the policyholder to renew the policy without undergoing additional medical underwriting. Explanation: Renewable term life insurance grants policyholders the option to renew their coverage at the end of the term without needing to provide medical evidence. This feature is beneficial for individuals whose health may have declined during the initial policy term, allowing them to maintain coverage without being penalized for health issues. It is crucial for policyholders to review the terms regarding renewal provisions, as these can significantly impact long-term financial planning and security. Question 21. What is the primary difference between level term and annual renewable term life insurance? A. Level term has a fluctuating premium while annual renewable term has a fixed premium. B. Level term provides coverage for a set number of years with a fixed premium, whereas annual renewable term provides coverage that renews annually with premiums increasing each year. C. Level term policies can be converted to whole life, while annual renewable term policies cannot. D. Level term policies are always more expensive than annual renewable term policies. Answer: B. Level term provides coverage for a set number of years with a fixed premium, whereas annual renewable term provides coverage that renews annually with premiums increasing each year. Explanation: Level term insurance offers a fixed premium and death benefit for a predetermined term, while annual renewable term provides coverage on a yearly basis, with premiums increasing as the insured ages. This distinction is crucial for policyholders to understand as they consider long-term financial planning and the implications of rising premiums over time. Question 22. In the context of life insurance, what does the term underwriting refer to? A. The process of paying out claims to beneficiaries. B. The procedure of evaluating risk to determine the insurability and premium of the applicant. C. The practice of marketing life insurance policies to potential clients. D. The review of policyholder claims after death occurs. Answer: B. The procedure of evaluating risk to determine the insurability and premium of the applicant. Explanation: Underwriting is a critical process in life insurance that assesses the risk associated with insuring an individual. Underwriters evaluate various factors, including medical history, lifestyle, and other risk indicators, to determine the premium rates and whether the applicant qualifies for coverage. Understanding underwriting helps clients prepare for what insurers may consider when applying for a policy. Question 23. Scenario: MS Jenkins purchased a term life insurance policy that includes an accelerated death benefit rider. If MS Jenkins is diagnosed with a terminal illness, what benefit does this rider provide? A. It allows her to receive the full death benefit immediately upon diagnosis. B. It allows her to access a portion of her death benefit while still living to cover medical expenses. C. It provides additional coverage for accidental deaths only. D. It automatically increases her premiums after diagnosis. Answer: B. It allows her to access a portion of her death benefit while still living to cover medical expenses. Explanation: An accelerated death benefit rider permits policyholders diagnosed with a terminal illness to access a portion of their death benefit early to help cover medical expenses and other costs. This rider can provide significant financial relief during challenging times, making it a valuable option for many policyholders. Understanding how this rider functions is essential for maximizing benefits during critical life events. Question 24. Which of the following statements about the return of premium rider is true? A. It guarantees that the premiums paid will be returned only if the policyholder dies during the term. B. It increases the overall cost of the life insurance policy significantly. C. It is automatically included in all term life insurance policies. D. It provides a guaranteed return of premiums only if the policyholder cancels the policy. Answer: B. It increases the overall cost of the life insurance policy significantly. Explanation: The return of premium rider ensures that the policyholder receives a refund of premiums paid if they survive the term of the policy. However, this rider often significantly increases the cost of the policy compared to standard term coverage. It's essential for consumers to weigh the benefits of potential premium returns against the higher costs when considering this rider. Question 25. What is the significance of the insurable interest requirement in life insurance contracts? A. It allows the insurer to underwrite the policy based solely on the insured's financial status. B. It ensures that the policyholder will suffer a financial loss upon the insured's death, thus preventing insurance fraud. C. It limits the number of policies an individual can own simultaneously. D. It requires the insured to have a specific health condition before obtaining coverage. Answer: B. It ensures that the policyholder will suffer a financial loss upon the insured's death, thus preventing insurance fraud. Explanation: the insurable interest requirement mandates that the policyholder has a legitimate interest in the continued life of the insured, typically based on a financial or familial relationship. This requirement is crucial for preventing insurance fraud as it ensures that individuals do not take out policies on unrelated persons purely for profit in the event of their death. Question 26. Under Montana law, how long must an insurance company retain policy records? A. 5 years. B. 10 years. C. Until the policy is paid in full. D. For the lifetime of the policyholder. Answer: B. 10 years. Explanation: Montana law requires insurance companies to retain records of insurance policies and transactions for at least 10 years after the policy is terminated or paid in full. This regulation helps ensure accountability and provides a reference point for resolving disputes or claims related to the policy. Question 27. Which of the following is a typical exclusion found in life insurance policies? A. Death from natural causes. B. Suicide within the first 2 years of coverage. C. Death resulting from a car accident. D. Death occurring during a natural disaster. Answer: B. Suicide within the first 2 years of coverage. Explanation: many life insurance policies include a suicide exclusion clause, typically stating that if the insured dies by suicide within a specified period, often the first 2 years, the insurer will not pay the death benefit. This exclusion aims to mitigate risk associated with policies taken out by individuals with suicidal tendencies. Understanding these exclusions is crucial for policyholders when selecting coverage. Question 20. What is the purpose of a life insurance policy's settlement options? A. To allow the policyholder to change the insurer during the policy term. B. To provide various methods for the beneficiary to receive the death benefit. C. To ensure the premiums are returned if the insured lives past a certain age. D. To allow the insured to alter the death benefit amount. Answer: B. To provide various methods for the beneficiary to receive the death benefit. Explanation: settlement options refer to the different methods by which beneficiaries can receive the death benefit after the insured's passing. Common options include lump sum payments, installment payments, or an annuity option. Understanding these options helps policyholders and beneficiaries make informed decisions about how best to manage the financial impact of a death benefit. Question 29. In Montana, how are premiums generally determined for life insurance policies? A. Based on the insurer's overall financial performance. B. Through a flat rate set by the state government. C. By evaluating the insured's age, health, lifestyle, and the type of coverage selected. D. By random selection during the underwriting process. Answer: C. By evaluating the insured's age, health, lifestyle, and the type of coverage selected. Explanation: premiums for life insurance policies are determined through an underwriting process that assesses the insured's risk profile. Factors such as age, health, lifestyle choices, e.g., smoking, hazardous activities, and the chosen type of coverage all influence the premium amount. Understanding these factors can help applicants present themselves favorably during the underwriting process. Question 30. Which of the following is an advantage of converting a term life insurance policy to a whole life policy? A. The premium rate will decrease significantly. B. The insured will have guaranteed insurability regardless of health changes. C. The death benefit will always increase. D. The policy will not accumulate any cash value. Answer: B. The insured will have guaranteed insurability regardless of health changes. Explanation: converting a term life insurance policy to a whole life policy provides the insured with guaranteed insurability, allowing them to secure coverage without needing to undergo additional medical underwriting. This option is particularly valuable for individuals whose health has declined during the term period, ensuring that they can maintain life insurance coverage despite changes in their health status.